Bitcoin, the world's first cryptocurrency, has had a remarkable journey. Born in 2009, it emerged from the shadows of financial uncertainty. Its creator, the enigmatic Satoshi Nakamoto, envisioned a decentralized digital currency. Bitcoin promised a new era of financial freedom, operating outside the control of governments and institutions. Early adopters recognized Bitcoin's potential. Bitcoin's value began to rise, attracting attention for its decentralized nature. It offered a transparent and secure way to transact. Despite significant volatility, Bitcoin's overall trend has been upward. Today, Bitcoin stands as a testament to the power of decentralized technology. Its journey is far from over. Understanding Bitcoin's past is crucial to navigating its future. Predicting the future price of Bitcoin is a complex task. Experts employ various methodologies, analyzing historical trends, market sentiment, and technological advancements. For 2025, some analysts predict Bitcoin could reach $100,000, citing increasing institutional adoption and growing mainstream awareness. Others suggest a range of $50,000 to $75,000. Looking further ahead to 2030, predictions become even more diverse. Some models suggest Bitcoin could reach $500,000 or even $1 million per coin, assuming widespread global adoption and Bitcoin's limited supply. Other analysts remain skeptical, citing regulatory hurdles and competition from other cryptocurrencies. By 2040, Bitcoin's price could be in uncharted territory. Some experts envision a world where Bitcoin is a dominant global currency, predicting prices exceeding $10 million per coin. However, such predictions are highly speculative. They depend on a multitude of factors that are difficult to predict. The future of Bitcoin remains uncertain, but intriguing. The Nakamoto portfolio is an investment strategy incorporating Bitcoin into a diversified portfolio. Bitcoin is a unique asset with the potential to outperform traditional assets. The Monte Carlo simulation models the probability of different outcomes. It provides insights into Bitcoin's potential future returns. One simulation suggests Bitcoin could reach $144,000 within a year. However, the simulation shows a wide range of potential prices, highlighting Bitcoin's volatility. Investors must be prepared for this volatility. Jurian Timmer, Director of Global Macro at Fidelity Investments, has made a bold prediction. He believes Bitcoin could reach $1 billion per coin by 2040. This prediction has sparked both excitement and skepticism within the cryptocurrency community. Timmer's prediction is based on Metcalfe's law, which states that the value of a network is proportional to the square of its number of users. As more people use and invest in Bitcoin, its value should theoretically increase exponentially. Furthermore, Timmer points to Bitcoin's limited supply. Only 21 million Bitcoins will ever exist. As demand increases and supply remains capped, the price should continue to rise. However, it is crucial to remember that this is just one person's prediction. Many factors could influence Bitcoin's price over the next 2 decades. The future remains uncertain, but Timmer's prediction is a fascinating possibility. Bitcoin's price is influenced by a complex interplay of factors. Understanding these factors is essential for making informed investment decisions. These include supply and demand, market sentiment, technological advancements, regulatory developments, and halving events. Bitcoin's limited supply means that as demand increases, the price tends to rise. Conversely, if demand decreases, the price may fall. Market sentiment refers to the overall attitude of investors towards Bitcoin. Positive news can boost sentiment and drive the price up. Negative news can lead to fear and a decline in price. Technological advancements can also impact its price. Regulatory developments are another crucial factor. Clear regulations could boost Bitcoin's price. Restrictive regulations could stifle its growth. Halving events reduce the rate at which new Bitcoins are created, putting upward pressure on the price. The world of Bitcoin and cryptocurrencies can be daunting. The potential rewards are high, but so are the risks. Before investing in Bitcoin, it is essential to conduct thorough research. Seek advice from qualified financial professionals. Remember that all investments carry inherent risks. Bitcoin is no exception. Its price is highly volatile, and can fluctuate significantly in short periods. Never invest more than you can afford to lose. Diversification is key to mitigating risk. Spread your investments across different asset classes. Stay informed about the latest developments in the cryptocurrency space. Always consult with a qualified financial advisor before making any investment decisions.